Is my self-directed IRA FDIC insured? And IRS Direct File Pilot results. Hey everyone, Adam Bergman here, tax attorney and founder of IRA Financial. And on today's Adam Talks, is your self-directed IRA FDIC insured? We'll see, explaining the difference between cash investments and investments into assets and how does the FDIC insurance apply in either cases. And then second part of the podcast, I'm going to talk about the new IRS Direct Filing Pilot program that just closed, basically allowing folks in 12 different states to use a new pilot program to file their tax returns along with their state returns for free. So we'll see, is the government going to start competing with your accountant? Talk about the results, how successful was it, why they started with only 12 states, and what does this ultimately mean for the future of tax filings for Americans? So pretty interesting results there. So definitely you're going to want to listen up. So let's start with first part of the podcast, and that is, what's FDIC insurance? So we all know FDIC insurance, or most of us know, it's a $250,000 federal deposit, okay, insurance that applies to cash. So if you have cash in a bank account, it means that the government will protect those funds and guarantee it up to $250,000. And it's the Federal Deposit Insurance Corporation, backed by the United States government, that does this. And it's there to obviously protect the banking system, give trust in the banking system. So we actually want to keep cash in the banking system. So the FDIC applies to self-directed IRAs just like it applies to cash. So the interesting thing about self-directed IRAs is, so IRA Financial is 25,000 accounts, and we have what's called an omnibus account. We have multiple omnibus accounts. And the way an omnibus accounts work is it's essentially a bank account that has thousands of people's money tied into this bank account. And there's an accounting record keeping system that keeps track of everyone's money. So every night, dollar for dollar, everything gets tied up, and it's directly linked to the amount of cash in the account to the rightful owner. Now, an omnibus account has what's called pass-through FDIC insurance, meaning that it's not just $250,000 for the whole omnibus, but it's $250,000 for each pass-through account. So if there's 10,000 folks' money in this omnibus account, each of the 10,000 persons will have the $250,000 of FDIC insurance because it passes through. It's not just per the omnibus, it's per individual banking representative. Each individual has a deposit through this custodian omnibus account that each receives the $250,000. Now, before March 2023, we all thought that the $250,000 was $250,000. But in March 2023, the Silicon Valley Bank, there was a run on the bank, and the feds basically came in and shut down the bank because it didn't have enough cash on deposits to meet all the withdrawals. And basically what they did is they huddled over a weekend and they said, actually, forget the $250,000. We're just going to guarantee the deposits. So they wiped out equity holders, they wiped out bond holders, but they made whole all the depositors. So sitting in 2024, May 2024, if you ask me what the FDIC insurance is for your self-directed IRA for the cash, I probably would say it's unlimited. If you use a major bank, we use UBS, Capital One. Clearly, Silicon Valley Bank, which is a top 15 bank, the feds came in and basically protected everyone's money. Again, they wiped out the equity holders and the bond holders, but they protected the depositors, which probably the fair approach. They needed to get the money somewhere, and I think it would be unfair to kind of wipe out hundreds, if not thousands, of businesses that had more than $250,000 in cash. But again, this is the risk. This is why you'd want to spread out the money across multiple banks. If you put it into securities, right? If you're buying treasuries or bonds or fixed income products, that is not cash. That is not FDIC insured. But the idea is it's in a security, and so long as that security is backed by the US government, it's going to be safe and liquid. So the lessons in the Silicon Valley Bank debacle is the FDIC insurance probably applies to an unlimited number now. And you want to be careful on an overnight perspective if you are a business or an individual of high net worth, how much cash you actually keep, and where is the cash held, at what type of bank. And that's what we've seen over the last year or so, is a movement from the small regional banks to the larger banks, where you see the JP Morgans, the Wells Fargos, the Bank of Americas are getting bigger at the expense of the smaller banks. But cash is protected under the FDIC. We said up to 250 now, probably unlimited. Assets are not protected. So it's important to remember, if you buy securities, right? Bonds, real estate, Bitcoin, a private equity investment, venture capital investment, investment in private stock, publicly traded securities, that is not FDIC insured. Okay. The government will not guarantee your investment. So you obviously need to do your diligence. You need to be careful, and you need to know what you're investing in, because the government will not bail you out if you invest in your neighbor's ice cream store and it doesn't survive, or you invest in your college roommate's bar and it doesn't make it. The government is not going to come in and give you back your money. Okay. That is not FDIC insured. So self-directed IRAs can do anything but three investments. It can't buy life insurance, can't buy collectibles like art, and it can't invest in any transaction that directly or indirectly personally benefits a disqualified person. And a disqualified person is defined under 4975E2 as the IRA owner, his or her lineal descendants, parents, children, spouse, daughter-in-law, son-in-law, or any entities controlled by such persons, 50% or more. Otherwise, you can do it, right? And I mentioned the most common self-directed investments, real estate, investment funds, private stock, gold, cryptos, hard money loans. That is not FDIC insured. Hence, if you do lose your money or you invest in a poor performing investment, the government will not bail you out, and the FDIC insurance does not apply to that asset. FDIC insurance protects depositors' cash deposited at a bank or financial institution. So again, the good thing about a self-directed IRA is it uses what's called the custodial omnibus program, and the omnibus program has passed through FDIC insurance for over for $250 per person. And since the Silicon Valley Bank, a lot of folks feel like, I don't need to get more than that because I'm at a major bank and the government is not going to let it fail. We've seen what happened at Silicon Valley Bank. It's precedent. The government can't bail out all the Silicon Valley bankers and depositors and then turn around and not do it for Bank A or Bank B in a different state, serving different types of clientele. So I think the FDIC insurance kind of set their own precedent now, where from a banking perspective, I guess better for you and me that we know we have more protection, and we'll see how the FDIC will figure out. The interesting thing about Silicon Valley is that they actually had well-performing assets. The problem is there was a run on the bank. A lot of startups had their money there, and then there were some very well-known venture capitalists that basically said, pull your money from Silicon Valley Bank, it's going to fold, and people did. And what happened is these investments, which were purchased when interest rates were really low, were fine. They're good investments. They're not worth as much if you sell it, but they're still fixed income bonds that pay off interest. The problem is the interest is 1.5%. So if you sold that bond and interest rates are 4 or 5%, you're going to take a beating. You're going to get 80 cents on the dollar. So they couldn't sell the bonds, meaning they didn't have enough assets to cover the deposits. But it's not like they bought stock in failed startups. No, they bought safe fixed income products. They didn't have a good enough risk compliance team that basically said, hey, we don't want to put all our money into these low interest rate bonds, because if interest rates go up, we're going to be underwater and we're going to have to hold them to duration. And if there's a run on our bank, we're not going to have enough cash to pay off the depositors. So they didn't have any risk controls in place. And that's what the problem. The government's going to get their money back, right? They're just going to have to wait out till these bonds mature, and they're going to get their money and they're going to collect interest. They just needed to come in and save these depositors, because the bonds were not going to be able to fetch enough money in the open market, because interest rates have gone up and the price of the bonds have declined because the interest rates have gone up. So it's a very, very unfortunate circumstances, but at least the FDIC, the gov came in and bailed everyone out. So FDIC again applies to cash, $250, although it's probably unlimited now. And if you invest in a self-directed assets, your assets are not FDIC insured. Just keep that in mind. Okay, second part of the podcast. So the IRS just closed this interesting pilot. I haven't talked about it on this podcast, but I've spoke to it in different venues. And it's this direct file pilot, and 140,000 taxpayers basically opted in and filed their tax returns for free on this pilot. And it was only, they started in 12 states, some of the more populous states like Florida, California. They wanted to start small to see how it did, make sure their technology could support the amount of people, but they basically realized that tax returns are too complicated and take too much time and money to do, and maybe folks aren't doing them or aren't getting the right advice because they don't have the money to pay the right accountants to help them. So they set up this free portal. It basically walks you through the process of filing a tax return for free. Excuse me. So yes, there are online versions where you can e-file at online, but you still have to pay. So this portal was going to allow people to do it for free. 140,000 people did it. It's not a lot, right? The 12 states, the population of the 12 states and the taxpayers that filed were probably 30 to 40 million, maybe more. Probably actually more, probably around 100 million. So if you say a 50 to 60% file, 140,000 is not a big number, but it's a trend now. And will the government compete with accounting firms to file returns for free? I don't know. Something to think about. Just so you know, California, 33,000 people filed, Texas, 29,000, Florida, 20,000, New York, 14,000, Washington, 13,000. So they were testing it in large states with large populations. They said about 423,000 people logged in and 140,000 actually submitted the returns that were accepted. And I think they're going to continue this program. They want to make it easier for people to file. Obviously, the easier and quicker people file, if there's no refunds and people owe taxes, the more, the quicker the people are going to pay their tax, which is due April 15th, and not have to file extension, which delays the, well, actually, April 15th is when the tax is due. So even if you file an extension, you still have to pay your tax April 15th, but they just want to make it easier so they'll get their money with less hassle. I don't know what impact this is going to have. I can tell you, I think the mid to higher income folks are still going to need an accountant to advise them how to maximize and optimize their tax position. But I think for low to middle income people with just W-2s, 1099s that don't have business deductions, going to take the standard deduction, they probably don't need an accounting firm, and they probably don't need to pay an online portal to do this. I think the direct file portal will allow them to file their taxes for free. So that's, very interesting development where the government is actually going to start competing with the private sector to file tax returns. I think their intention's good. Now, will they be able to give low to middle income folks all the great optimization and tax advisory service they can afford? I don't know. Most people, if you take a standard deduction and you have a W-2, there's not much else you can take in terms of, from a tax deduction standpoint. So it's probably going to suffice and do its job if you just use the free portal. But for the taxpayers that are middle, high income, have businesses, there's depreciation, there's different credits that may be available. I think paying an accounting firm has a lot of value, and I think that will continue. And I think that's helpful because I have a lot of friends that are accountants, and they basically now are turning away small individual taxpayers. They're like, we can't make any money on them. It's a pain in the butt. They send us all their, their statements. We don't have time. Can't charge enough. So we actually are sending them to e-file or all these online sources, all these tax online sources to do it because we don't want to deal with them. It's not worth the time. We'd rather deal with businesses, high net worth, high income folks that we can charge and actually provide them the optimization services that will help them from a tax perspective. And someone that just has a regular W-2, we can't offer them any value. It's not worth our time or their money. So I think this will hurt the online portals a lot because ultimately if this is easy and the government keeps expanding this to more states, you got more and more taxpayers say, you know what, I'll file for free. I don't need to pay even $50 or $100 to a tax online portal. I'll use the IRS portal. I'll do it for free. It's easy. It even connects to the state portals, and I'll file my return right away and more cost effectively. So I just wanted to mention that because I don't think this will, put the larger, more sophisticated accounting firms out of business. I do think this could hurt some of these online tax portals, tax filing services that are counting on low to middle income folks who just have regular W-2s with standard deductions to file their returns. And even if they're charging, $150, this free portal is going to compete with them, and the government is offering the same service for free. So it's going to be hard for these private enterprises to compete. So that's it. Hope you guys enjoyed today's podcast. FDIC insurance, always an important topic. I get this question a lot. People just want to make sure what's protected and what's not. So I hope this podcast has clarified cash up to $250, although probably since Silicon Valley up to an unlimited number, assets, securities, cryptos, gold, stocks, investment funds, not FDIC insured. You are not going to get bailed out by the government, unfortunately, if your investment doesn't materialize. So just keep that in mind. That's why it's important to do your diligence, your research, and investigate what you are investing in, because it is a self-directed account. And yes, IRA Financial will be there to make sure you're not doing a prohibited transaction, or we'll be there to provide advisory and tax optimization services, even tax filing and tax reporting services, but we're not going to be able to guarantee your investment. So it's up to you. And that's why it's important to fully understand what you're investing in and do your homework and make sure you're fully confident, and at least to the extent you can be. Obviously, no investment's guaranteed, but at least confident that you know the risks and rewards of the particular investment. So thanks again. If you are watching on YouTube, appreciate it. Don't forget to subscribe. It's an awesome channel. Best place online if you're looking for information on self-directed retirement accounts, 401ks, alts, tax strategies, tax optimization for retirement accounts, especially for investors and small business owners. So thanks again. If you are listening, don't forget to check it out again next week. It's going to be even more fun, and you're going to learn something. I promise. That's why I do this. Have a great day. See everyone again next week. Thanks.